I'm Stan Luxenberg. I'm the mutual fund writer for wealthmanagement.com, and we're talking to Jim Moffett, who's portfolio manager of Scout International Fund. Scout's had a strong long-term record. It buys established stocks, and it's done well in down markets and in tough years like 2008. So Jim, you have big positions in Europe. Are you able to find stocks with good earnings in Europe? What kind of things are you finding in Europe?
Well, we find a lot of stocks with good earnings in Europe. I mean, not everything's bad. I mean, in some cases they're swimming against the stream, obviously. But Inditex in Spain, one of the largest apparel retailers in the world, just reported surprisingly good earnings. They're up in a country that does 40% of their business in Spain. Luxottica in Italy. Some of the European insurance companies we like, some UK banks, but that's for their exposure to the emerging markets, particularly I think like Standard Charter and HSBC, that their business is kind of rolling along, particularly Standard Charters.
Mm-hmm. So even if there's a recession in Europe, even if times are tough, those companies can still do well. Is it because they're taking market share, or because of overseas sales, or?
It's because of overseas sales, emerging markets in many cases. In terms of like Inditex, I mean, they're doing well just because they're well run. They're very responsive. They also have an interesting wrinkle in the sense that they manufacture in North Africa. And so they have stuff in the stores by the time their competitors are putting them on the boat in China.
Mm-hmm. How are the prices in Europe? Are you finding things undervalued? Have investors overreacted to the bad news in Europe?
We think there are good values there, and there's some, if you look for them, it isn't our strategy, but there's some good yield situations, that companies that are prospering and paying dividends. It's a good place to invest. Now, in terms of a fast buck or a fast euro, it's a patience game.
So you've always looked for good, strong companies. Do you find those in Europe? I mean, do they have good balance sheets, and what kind of things do you look for as far as the quality of the companies?
Well, I mean, we look at good balance sheets are one of the first things we look for, and there are companies like Vodafone that they've got good cash flow and a good balance sheet, and they're in a position to buy the assets from these troubled companies that need to raise money. It's a classic case of, you sell the good to save the bad, and they're in a position to buy those assets. So A, they've got the cash, and B, they're in a position to grow. As just an example, Luxottica has made acquisitions. I mean, it's the companies there are companies there that are prospering.
What about in Japan? Do you have Japanese stocks, and how do things look in Japan?
We have relatively about a half weight in Japan compared to the IFA. Most of that is industrial technology stocks that are export oriented. Japan does a very good job of that end of the world. The more domestic end of their business, there are huge inefficiencies in their economy, the equivalent of still having lots of mom and pop operations, whereas the major export-oriented companies compete on a worldwide basis. And they're one of the subtle changes, by the way, in Japan is with the collapse of their banking system. And it used to be that Japanese companies could just hoof down to the bank and borrow another zillion yen. That door got closed to them, so if they're going to grow, they're going to have to compound equity. Well, they had to figure out that compounding equity meant you needed to focus on ROE. And 20 years ago when we started the fund, I mean, a lot of Japanese companies had come through town, and ROE was an alien concept. So there's a subtle change there where they're thinking about profitabilities, and many of them are, the good ones are available at a reasonable price. The small ones are, we've got a small mid-cap fund. It's very frustrating because the small ones are just incredibly cheap, but it's hard to see what's going to change that situation.
Mm-hmm. Now, do you ever invest in the emerging markets, or you wouldn't do that in your fund?
We've got about 13% in emerging markets, a lot of it in Latin America, and some of it's kind of borderline. They're developing markets, as they call them now, like Korea and Taiwan. But we've got investments in Latin America, Mexico, Colombia, Brazil and Chile at this point.
So you can find companies in the emerging markets that meet your criteria for good balance sheets, good rock-solid companies.
Right.
Yeah.
And the irony is, in many ways, in terms of balance sheets, that like Brazil, historically because of inflation, debt was a bad instrument. It was hard to get loans, and so the companies there basically were living on equity. Well, it leaves them with a good balance sheet. In many ways, better balance sheets than our companies.
Okay, well, thanks very much, Jim.
You're welcome.